Budget 2021 has introduced a new form of penalty, but it's not a penalty. It is something called a surcharge. Surcharge is something that you pay on top of something else. So it's not a tax, it's not a penalty, but effectively it is like a penalty. So at the moment what they've introduced is a surcharge. There will be a 5% surcharge whenever there is an adjustment made to transfer pricing. So if there's a transfer pricing adjustment, there will be a 5% surcharge, whether you have additional tax to pay or not. For example, if you have a company with losses, and if there is an increase in taxes, if there's a transfer pricing adjustment that increases the taxes, it absorbs the capital allowances or the losses brought forward, you have no tax to pay. So there will be no penalty. But now with the introduction from 1/1/21, there will be a 5% surcharge. That means whenever there is a transfer pricing adjustment, there will be a 5% surcharge. Whether you have a tax exempt company, which is a tax holiday company, or a company with tax losses, capital allowances, which absorbs, and there is no additional tax to pay. So practically every adjustment they make, the IRB, you will have an additional 5%. Now this 5% is not even regarded as a penalty, so you may not even be able to appeal as a penalty. The only way in which you can get this surcharge reduced is you've got to go and actually literally beg the Director General, and he has within his powers to remit the penalty. So you are at the end of the day, you rely on his discretion to reduce the surcharge. There is no penalty provisions at the moment. There is no provisions to actually automatically appeal on the surcharge. So you got to be careful. So this surcharge, now that means you must prepare your contemporaneous documentation very well. Because if you end up disagreeing with the Inland Revenue, although you are right, and you may be proven right in the courts tomorrow, there will be a surcharge upfront. So preparing annual TP documentation and preparing it comprehensively so that you can defend it and satisfy the authorities and avoid an adjustment is a must in order to avoid a surcharge. So please bear in mind, this is an entirely new concept and nowhere else is there such a thing in the Income Tax Act. This 5% surcharge means any adjustment. So preparing TP documentation and having your transfer pricing policies and getting your pricing right for transfer pricing is utmost importance. That's it.